with more analysis, joining us live now is Joe Masters, Chief Economist at Barrenjoey. Joe, appreciate your time. Thank you. We heard from the Treasurer, Jim Chalmers, at that news conference just a short time ago. He said it's likely the peak for inflation has been reached. How confident are you in that assessment? Do you think inflation has now got there to the peak?
That's what we have in our numbers, and indeed that's what we're seeing in other advanced economies around the world. And that is important because there is a global commonality to this inflation challenge. Now, we won't know that, of course, until we get the March quarter data, which we won't see until late April. But we do think this is the peak. The most important issue, as Ross Greenwood just mentioned, and in fact the quote from the Treasurer, though, is how quickly inflation can come down. So we're at 7.8% now. The RBA's target band is 2 to 3%, and we don't think that we'll get below 3% until 2025.
Well, Jim Chalmers did make the point that the biggest jump in inflation was in that first quarter of 2022, certainly not in the last quarter.
That's right. We are seeing some slowing in the momentum in inflation, and that is encouraging. I actually think when we sort of dissect the CPI basket, what we are seeing is that the price increases for goods, so things like clothing, furniture, for example, that is starting to decelerate. And that's consistent with the global supply chain is starting to get moving again. The reopening of China is positive for that. Shipping costs have come down. Some of the costs for building a home have come down. So we are starting to see those pressures ease from a very high level. What is concerning, though, is that inflation for services, things like holiday travel, for example, are continuing to accelerate. And that's partly because demand is there. Australian households that have been locked down are keen to get out and about. But it's also because wages and rents are the number one cost to those businesses. And we are still seeing increases in cost pressure from wages and from rents.
Energy prices were also there in the mix. What is your expectation as to how long that will take for the government's interventions to try and moderate those prices?
There's several factors in that. As you said, we've got these interventions and they will take time to play out. There's a variety of different initiatives from the government with a variety of different timelines. The real uncertainty, though, is around wholesale costs, and to some extent we're beholden to what we see globally. So we do expect that electricity and gas prices will continue to rise over the next 6 months, and that indeed is consistent with the Treasury's own forecasts and what was in the October budget. The hope is beyond that, though, that we start to see some easing of those pressures for households.
We have also been flagging the possibility of more rate rises, with the Treasurer describing this figure as unacceptably high. Would you agree that that means the Reserve Bank really has no choice on that front?
Look, we're expecting another 25 basis point rate hike in February. We're very confident about that, particularly given this upside surprise on inflation. And in fact, that's what the market is pricing. It's almost fully priced now. We also think that the RBA will nudge rates higher in March by a final 25 basis points, taking the cash rate to 3.6%. From there, we actually think the Reserve Bank will sit on their hands for several months. And that is partly to do with the fact that fixed rate mortgages are rolling off. That really starts to pick up steam through April, May, June and July. And those households will face an almost 50% increase in their mortgage rates. Now, we're also seeing that rental costs are increasing for people who rent. And even for homeowners without a mortgage, house prices and asset prices more broadly are falling. At the same time, we've really used up the savings, more or less, that we saved during the pandemic. So the headwinds coming for the consumer are considerable. We have a consumption per capita recession in our forecast through the middle of 2023.
Joe Masters, always appreciate your analysis. Thank you.
Thanks.